A stylist earning $8,000 a month in services keeps roughly half of that under a typical 50% commission split. Move that exact same stylist, same clients, same skill onto a booth rental arrangement instead, and they can walk away with over $1,000 more every single month, more than $16,000 a year, for doing the exact same amount of hair. Before you open a salon, let me tell you something. That gap isn't a rounding error. It's the entire business model of the modern salon industry sitting in plain sight, and whether you're the stylist or the owner, understanding exactly where that extra money comes from and who it comes out of changes everything about how you should actually build this business. By the time this is over, you're going to understand exactly why. Before we talk about money, we need to talk about what a salon actually is. Because depending on which model you build, you're not necessarily opening the same kind of business as the salon down the street, even if it looks identical from the sidewalk. There are really three structures hiding under the word salon. A commission model, where stylists are employees, earning a percentage of the services they perform while you, the owner, handle payroll taxes, workers' compensation, and benefits, and in exchange, you keep meaningful control over service quality, scheduling, and brand experience. A booth rental model, where you shift from employer to landlord, renting individual stations to independent stylists who bring their own clients, set their own schedules, and keep everything they earn. And a hybrid model, increasingly common, blending both structures under one roof depending on each stylist's experience and client base. Each of these is a genuinely different business with a genuinely different risk profile, and the model you choose determines almost everything else about how the rest of this video applies to you. Here is where the range depends heavily on which of those three structures you're building, more than almost any other business in this series. At the very lean end, renting a single booth or suite inside an existing salon can cost as little as $10,000 to $25,000, letting you build a client base and test the business before committing to your own lease. A standard mid-sized commission salon typically requires $100,000 to $150,000 to launch, covering lease build-out, equipment, licensing, and initial marketing. A full salon build in a higher-cost market, factoring in premium real estate, plumbing for multiple wash stations, and higher local licensing fees, can require anywhere from $60,000 to well over $500,000, depending on location and positioning. Here's the part that catches almost every first-time owner off guard. Labor is the single largest expense in this entire business, commonly 40 to 55% of revenue under a commission structure, which means your break-even point isn't primarily about rent or equipment. It's almost entirely about how many chairs you can keep consistently booked with paying clients. So you've built your space, hired or onboarded your stylists, and technically you're now a salon owner. Congratulations. Before your first client sits down, you have a set of problems that a normal retail business simply doesn't have. The first problem is licensing, and it applies to every single person cutting hair under your roof. Every working stylist needs a valid cosmetology license, typically requiring somewhere around 1,000 to 1,600 hours of training and a state exam depending on where you operate. You can't simply hire willing staff. Every chair needs a properly licensed professional in it. The second problem is that worker classification law is genuinely shifting, and it directly threatens the booth rental model. Several states have been tightening the legal definition of an independent contractor, and a booth rental arrangement that isn't structured correctly can expose an owner to real reclassification risk, potentially owing back payroll taxes and benefits for stylists who were treated as independent renters but functioned more like employees. The third problem is that your highest earning asset can leave whenever they want, taking their clients with them. Whether commission or booth rental, a stylist-client relationships are largely personal and portable. A popular stylist leaving for a better arrangement down the street doesn't just cost you a chair, it costs you every client who was loyal to that specific person rather than to your salon's brand. The fourth problem is utilization, and it's brutally mathematical. If you're running a salary or guaranteed income structure for any of your staff, near-perfect chair utilization becomes financial survival, not just a nice-to-have, because fixed overhead like rent has to be covered whether or not every chair is booked every hour of the day. Let's say you've solved the big problems: space built, stylists and chairs, licenses verified. Now let's talk about what it costs every month, regardless of how many appointments get booked. Fixed operating costs, rent, utilities, insurance, and basic supplies commonly run in the range of $7,000 a month for a modest space, totaling well over $100,000 a year that has to be covered before a single dollar of owner profit exists. Layer commission-based payroll on top of that fixed base, and labor alone can consume 40 to 55% of every dollar of revenue that comes through the door. And this is the part that quietly separates thriving salons from struggling ones. because fixed costs don't move whether your chairs are full or half empty. And because commission payroll scales directly with revenue, a salon owner running a commission model has comparatively little room for empty chairs, while a booth rental owner has traded that risk away, at the cost of giving up most of the upside when business is genuinely booming. Here is where the salon business gets genuinely interesting, because there's a very specific, calculable dollar figure where the entire commission versus booth rental question flips, and almost nobody in this industry actually runs the math before making the decision. Below a certain monthly service revenue, commonly somewhere around $5,500 to $6,500 a month for an individual stylist, the commission model is genuinely the safer arrangement because the salon owner is absorbing the risk of a slow week, covering the rent whether or not that stylist's chair stays full. Above that threshold, the math flips, and a stylist earning meaningfully more than that crossover point is effectively subsidizing the owner's fixed costs by staying on commission instead of renting their own space. This crossover point means the salon industry has a structural tension built directly into its most common business model. A commission salon owner's most profitable stylists, the ones generating well above that threshold, are also the ones with the strongest financial incentive to leave for booth rental the moment they realize the math. The stylists an owner most needs to retain are, mathematically, the ones the commission model incentivizes least effectively to actually stay. There are really two types of people who end up owning salons, and their businesses look almost nothing alike. The first is the commission model builder, someone who hires stylists as employees, invests in training and brand consistency, and captures a meaningful share of every service performed in exchange for absorbing the payroll risk and the slow weeks. This owner has genuine control over quality and experience, but is constantly managing the tension of a compensation structure that quietly pressures the best performers to eventually leave. The second is the booth rental landlord, someone who shifts almost entirely into renting stations to independent stylists, trading service revenue upside for predictable rental income and dramatically reduced payroll risk. This owner's ceiling is lower per chair, but their downside is far more limited, and they're insulated from the exact retention pressure that quietly works against commission model owners. Let's run the numbers on a mid-sized 8-chair commission salon, opened for $125,000. Let's talk. The optimistic scenario: all 8 chairs stay consistently booked with stylists generating solid, steady revenue near or below the crossover threshold, meaning the commission model genuinely works in everyone's favor. Combined monthly service revenue lands around $50,000. After commission payouts and fixed operating costs, the salon nets a healthy margin in the low teens percentage range, and the $125,000 investment pays back within a reasonable multi-year window, consistent with industry averages for a well-managed salon. Now let's talk the realistic scenario. 2 of your highest-earning stylists, both generating well above the crossover threshold, do the math themselves 18 months in and leave for booth rental arrangements at a competing salon down the street, taking a meaningful share of your total revenue with them. You backfill both chairs, but with less experienced stylists still building their client base. Combined monthly revenue drops by nearly a third, fixed costs remain exactly where they were, and your net margin compresses sharply, stretching your payback period well beyond what you originally modeled. The difference between those two outcomes isn't your space, your branding, or your equipment. It's whether your compensation structure was ever built to keep your best people once they figured out what the math actually said. Owning a salon is not simply a beauty business wearing a business license. It's a compensation structure business first, one where the difference between commission and booth rental isn't a minor administrative choice. It's the single decision that determines who captures the upside when a stylist becomes genuinely successful and who bears the risk when a chair sits empty. The $10,000 single booth rental and the $500,000 full commission salon are the same business wearing different clothes. A bet that your structure gives your best people enough reason to stay before they run the same crossover math. Your most talented stylist is eventually going to run for themselves. For the owner who understands that retention is a math problem, not just a culture problem, a salon can settle into one of the more durable people businesses in this series. For the owner who assumes loyalty alone keeps a chair full, it's an expensive way to discover that the stylist doing the best work in the building was always the one with the clearest financial reason to eventually walk.